If you would like to catch massive moves like this, then this video is for you. In today's video, I'm going to show you how you can catch multiple spikes just like the ones we have here. Okay, now this video is beginner friendly and is easy to understand. Catching spike on boom and crash is very easy if you follow this strategy correctly. Now, for you to catch spike on boom and crash, you have to ensure that the trend is bullish, that is going upward, okay, that is trending upward on the higher time frame. Let's check out the higher time frame. What I mean by that, let's go to the H4. Now look at this right here. Can you see this right here? Okay, so right now the trend is getting bullish. Can you see this? It was initially bearish, now it is bullish. So for you to catch spike on boom and crash, ensure that your higher time frame H4, H1, okay, the 30 minutes, make sure they are all what? Bullish. Okay, now look at that. This is the H1. Can you see that? This is the H1. You can see that it is bullish now. So you can see it is bullish. So having seen this, what you should be looking out for is an opportunity to catch some spikes. Okay, so make sure that you check out your higher time frame first before taking a position on the lower time frame. So today's strategy, I'm going to show you how to catch spike using this simple indicator, and it is really effective. Let's head over to the 1 minute time frame. I'm going to pull up my indicator window right here. Let me explain how this strategy. Okay, so right here we have our indicators. Okay, so on our indicator window we have 3 indicators. We have the RSI, which is going to tell us the level, and the RSI, let me expand this a bit. Okay, so you can see the levels. Okay, now look at the RSI. We have level 90 and level 85. Okay, level 90, can you see that? Level 90, level 85, and then we have level 15 and level 10. So those are your levels for your RSI. Okay, so take note of that. So let me minimize it back down as I explained. So now, in order to catch spike using this strategy, you have to wait for your MACD and your moving average to hit the oversold level, okay, which is your level 10 and level 15. Now, the moving average is going to touch the level 10, okay. This moving average, this is the moving average, this blue line right here, okay, the blue line is going to touch level 10. Why the MACD will not necessarily touch level 10 sometimes, so it often touches level 15. That's why we have both level 10 and level 15. So the moving average will touch level 10. Okay, so the moving average touches level 10, which is this level right here. Let me increase this window. Okay, so the moving average should touch what? Level 10. Why the MACD will not always touch level 10, but it often touches level 15 or between level 10 and level 15. And that is exactly what we have right here. If you can see that, that is exactly what we have right there. So the MACD is the red line. Okay, the MACD signal is this red line, while the moving average is the blue line. Okay, so the moving average touches level 10, the MACD will not touch level 10, but it will go beyond level 15. You understand? So that is it. So when you see this happening, and then you see this interception right here. Can you see this interception? Okay, you can see this interception. Can you see the interception between the moving average and the MACD? So when that interception happens, that is when you will hop into this trade. Now, I want you to note something. The moving average is going to hit the level 10 first, but the MACD will still be a bit far away. Okay, so you have to wait until the moving average and the MACD intercept. So when that interception occurs, that is when you hop into the trade and wait for spike to happen. Okay, so looking at our chart right here, you can see that at every point that the moving average and the MACD touches level 10 and 15, a spike occurred. Can you see that? Look at it right here again. A spike occurred. So that is when you ought to go up into the trade. Now let's check again to see if this is accurate with other times. Okay, now look at that right here again. Can you see that? We can see the moving average and the MACD intercepting right at level 10. Can you see that? And what happened? Spike occurred. Can you see that? Let's check again. Can you see that interception again? Okay, now it's not every time that they touch level 10 that you have to up into the trade. You have to ensure that you have checked your higher time frame. Okay, now this is the 30 minutes time frame. Okay, and looking at this place, you can see that this is looking at this zone right here, you can see that this is a major support zone. Okay, and when you look at the indicator, you can see that it hit what level 10 and there is been an interception. So this is an example of where you are to enter into this trade. Can you see that? So you should enter at what support zones. So this is how this is an example of where you should enter. Okay, so imagine identifying a support zone right here at the 30 minutes time frame and then head over to the 1 minute time frame to what get a position. You are going to catch a whole lot of spikes. Can you see that? All these are 30 minutes candlesticks, and on the 1 minute time frame is going to spike. Okay, so that is what I'm trying to explain to you. Let's look at this zone on the 1 minute time frame. Let me mark it out. So I'm going to mark out this place so we'll be able to identify it on the 1 minute time frame. Okay, so this is a zone on the 1 minute time frame, and you can see that the MACD and the moving average touched level 10 frequently. Can you see that? Because the support zone was being rejected multiple times. Can you see that? And when it finally broke out of this zone, when it finally broke out of this support zone, when it started trending up like it did on the higher time frame, can you see that you are going to catch a whole lot of spike? Can you see that you're going to catch a whole lot of spike up there? So this is how to use this strategy, and you can also use this strategy to scalp. Okay, you can also use this strategy to scalp, just like I have explained for the spike catching. You can use it to scalp. Let me show you that. So in order to scalp using this strategy, all you have to do is allow the moving average to what hits level 90, and the MACD will be above level 85. Can you see that? And there will be an interception right here. Can you see that? Can you see that interception? Let me zoom in. Can you see that interception? So there's going to be an interception right there between the MACD and the moving average. And when that happens, you can now hop into the trade and you are going to start scalping all the way down here. Can you see this? Can you see this? All the way down. Can you see that? So this strategy is very, very powerful. Okay, it's something I have used over and over again and is very effective. It's very, very effective. I would say it's 99% accurate if you follow the process I've told you by checking your higher time frame first before hopping into a trade on the lower time frame. So I'm going to give you the setup of this indicator. Okay, I want to go over to your chart and backtest this strategy and see if every time that the MACD touch level 10 and there's an interception, if actually spike occurred, and if every time it touched level 90 and there's an interception, if you can actually scalp all the way down. So this is how to use this strategy. It's very, very effective for spike catching and for scalping. Very, very accurate. So let's head over to our indicator window to check out the settings of this indicator. Okay, so these are the indicators for today. Okay, so we don't have any indicator on our main chart, but if you want to add any indicator for direction, you can add the moving average. Let's add the moving average to the main chart. Okay, so let's add the moving average to the main chart. Okay, so let's say period 6, the method is smoothed. Okay, the shift is 0, so let's just add it for direction. This helps beginner to know when price has changed direction from bullish to bearish or bearish to bullish. Okay, so now these are the indicators for today. So we have the relative strength index, we have the MACD and then the moving average. So let's check the setting of the RSI. So the RSI is period 250. Okay, so just take a screenshot. It's the same setting we used in our previous video. So period 250 apply to typical price, and the levels is different from the previous video though. So these are the levels: 10, 90, 85, and 15. Okay, then the style should be the color of your background. Okay, should be the color of your background. Then you click on save. So let's check the setting of the MACD. So these are the parameters of the MACD. We have the fast EMA to be 14. Okay, the fast EMA 14, the slow EMA to be 30, and then the MACD SMA to be 10. And then you have apply to close. Okay, so just take a screenshot of it. Then there are no levels. Then you just add the colors, okay, to your style and the signal. You can use the default color, and after that you click on save. And then we have the last one, which is the moving average. So the moving average is period 2. Your shift is 0. The method is simple and apply to previous indicators data. That is, it should be applied to MACD's data. You understand? So it will not be repenting. Okay, it won't repent. It won't be moving. It won't be leaving the spot when you move your screen. Okay, so apply to previous indicators data. So no levels, apply to all time frame, and the style is blue. So these are the settings of these indicators. So I want you to go over to your chart and back test it, and you can also use this for all boom indices and for all crash indices. So go over to your chart now, try it out, and tell me what you got. Okay, so if you got value from this video, I want you to hit the subscribe button, like this video, and share it to friends who need good strategies to trade. Thank you for watching. Bye.